Hello and welcome to our guide on balance sheets for micro companies. If you've ever struggled with balancing your balance sheet, you're not alone. My name is Emma and I'm an account specialist at Easy Digital Filing. In this video, I'll break down the basics of balance sheets as well as a step-by-step accounting process through our software to make everything clear and manageable. If you're a small business owner or are looking to set up a micro company, understanding your balance sheet is essential for accurate financial reporting. So let's dive into it. A balance sheet is a snapshot of a company's financial position at a given point in time. This document is crucial for understanding what a company owns, what it owes, and its overall value. While balance sheets may seem more complex for larger companies, micro companies often have simpler balance sheets with fewer items. The balance sheet is made up of two key sections. The first is the net assets. This includes everything the company owns, also known as assets, minus everything the company owes, also known as liabilities. And the second is the capital and reserves. This reflects the initial share capital that the owner put into the company, plus any retained earnings from previous periods, along with this current period's net profit, minus any dividends or distribution of profits that were made by the company within the period. These two parts must have the same figures, hence the name balance sheet. So let's break down what each of these mean and how they work together. Net assets is essentially everything your company owns minus everything it owes, and it's divided into two main categories. The first part is assets, which is everything your company owns. Typically for micro companies, this can include any of the following: cash held in the company's bank accounts, which would be recorded as current assets, any stock, which is products that the company purchased and intend to sell, any trade debtors, which is money owed to the company by customers who haven't paid their invoices yet, and also fixed assets, which are long-term assets such as equipment or property. The second part is liabilities, which includes everything that the company owes. So this could include trade creditors, which is money that is owed to its suppliers, any outstanding debts or loans, and any tax liabilities owed to HMRC such as corporation tax or VAT. For example, let's say the company has £2,000 in cash, £500 in stock, and £1,000 of trade debtors. On the liabilities side, let's assume that the company has £1,200 of VAT and a £500 bank loan. So your net assets is the total value of your assets minus the total value of your liabilities, and so the net assets will equal 1,800. Next, we have the capital and reserve section. This represents the owner's share in the company and is comprised of two main parts. The first is the share capital. This is the money that you invested into the company when you incorporated it. For micro companies, you might have issued one or two shares with a nominal value, such as £1 each, and this is known as a share capital. The second is the retained earnings. These are the profits that the company has made in previous periods that have been kept within the business rather than being paid out as dividends. After paying taxes, the current net profit is added to your retained earnings. For example, if you had £500 profit this period, this would be added to your capital and reserves. The balance sheet needs to show the net assets and the capital and reserves as being equal to each other. So for example, if the net assets are equal to £1,800, then the capital and reserves would also show as £1,800. This would include the £2 of share capital, which is the share capital initially issued after incorporation, plus any issued after, and the £1,798 of retained earnings. The balance sheet is crucial for understanding your company's financial health. For micro companies, it helps ensure that you're tracking your assets, liabilities, and overall value accurately. A well-prepared balance sheet helps you make informed decisions about cash flow, debt management, and growth opportunities.
Now let's look at a simple example of a balance sheet for a micro company using Easy Digital Filing software in order to help clarify the filing process for you. First year, incorporation. Let's imagine that you are filing for your company's first accounting period and it has not yet started trading. When incorporating, you issued 2 shares, each with a nominal value of £1, so your share capital is £2. You can always double check the number of shares and whether they are paid or unpaid on your company's certificate of incorporation on Companies House. Let's say the shares were paid and you deposited £2 into the company's bank account. This gives you £2 in current assets. If they were unpaid, they would be entered into the called up share capital not paid box instead. So your balance sheet will look like this. Net assets are £2, which is the cash in the bank, and the capital reserves are also £2, which is the share capital. The balance sheet is balanced because both sides are equal. Second year, paying expenses. You are now filing for your company's second accounting period, which has begun trading. Let's imagine that you need to pay £1,000 for your office rent, which is an expense in your income statement. However, you also take out a loan of £1,000 to cover this expense, which is reflected in the balance sheet. Now, your balance sheet will look like this. So the net assets are £2, which is the bank balance, minus the £1,000, which is the loan, which equals negative £998. Then, the capital reserves are the £2 of share capital which are carried forward from the previous period, minus the £1,000 of trading loss, which also equals negative 998. So the net assets equals the capital reserves.
And that's all you need to know to understand and prepare a balance sheet for your micro company. You can also download these slides from this tutorial using the link below. If you found this video useful, please like, share and subscribe for more tips on managing your small business. Thanks for watching and we'll see you in the next one.